Hi, welcome to the Market Alert for Wednesday, the 3rd of November 2021. So today is D-Day for the Fed. Are they going to announce their tapering or not? But certainly the prospect of it had the futures market rallying yesterday, as you can see, but the rally fizzled out. I'm not going to read the subheads on all of these. There's so much news this morning. FOMC preview will put $5 in the Atlanta Fed swear jar. Actually, I will read this one. During the press conference, Powell is likely to stress again that the end of tapering does not automatically mean the start of hiking, and that the high inflation readings are transitory. So obviously it's the swear jar, because they couldn't tell the truth if it was right in front of them. Bond market volatility surges to 18-month high at a Fed taper talk. That tells you they are getting worried. Markets are just going to break in some parts. One bank sees bond market turmoil shifting to stocks. And crypto and stocks hit record highs ahead of Fed taper talk. Traders are the greediest since December 2020. And the put hate is strong, i.e. put options. Nobody wants them. And China junk bond yields hit all-time highs as property default contagion spreads. Home sales plunged 32%. So in the West, you've got all-time highs in all of the speculative derivative markets. And in China, you've got an all-time high in junk bond yields, with home sales plunging 32%. This will catch up eventually as China goes further and further into a massive depression, and everything starts to fall apart. This is just being kept out of the news at the moment, but as you know from the Market Alert, we've been reporting on this for weeks with Evergrande, and it's all still going on in the background, as we can see here, but just ignored by all the other, frenzied futures rally in the West. Just keep buying the stocks. So news today, it's the big one, isn't it? Let's just have a look. We've got 10 a.m. We've got Lagarde speaking there, whipping the criminal out at 10 a.m. 12:15, we've got the ADP non-farm employment. Lots of news, isn't there? Services PMI. We've got crude oil inventories at 2:30 as well. 4 p.m. Bailey is speaking, and then 6 p.m. is the biggie. Will we see Powell actually taper or not? Certainly interest rates are going to be kept on hold, that's for sure. But this is the one, the conference at 6:30 p.m. Obviously earlier, as the clocks went back in the UK last week, and the US have yet to do this. So let's have a look at the market's reaction yesterday. Starting off with the Dow, we can see we've got a new all-time high for yesterday, as the market using the futures, using derivatives. You can do anything with derivatives, which we saw with the cryptos back in 2017 when the futures contract was developed, and that slammed the price all the way back down to 6,000 from 20,000 the first time it went there. And we're seeing this in the silver market, and have seen it for years, just using a derivative, paper derivative, to do whatever they want. And this was a piece of cake yesterday, managing to move the price straight up. We had one 30-minute down bar, and then the rest was just straight up as they brought the market up. But you can see them doing this beforehand. As I've said before, the first down bars that you get in the DAX and in the Dow after they've used the futures to bring up the prices is generally the big shots selling. That's what they use the futures contracts for. Bring up the value of the individual stocks and the market overall, and then they sell off the stocks, and then once the selling's taken place, they can then mark up the cash market stock values and bring the market back. And that's exactly what you see all of the time. So here's a look at the monthly chart. I thought I'd put this in for you. You can see from COVID crisis how far we've actually come up in the Dow, and the madness continues. So here's the low. This is the all-time high. You can see there we're up nearly 18,000 points from this low to this high. So again, just a matter of when they start to taper. As you'll see, this was the last time, not the last time. The last time they started to taper, if I can find it, was here back in 2018. And you can see there what happened. The market didn't like it, so they started QE again and brought the market back, and then we had the COVID crisis. So if you take the COVID crisis out of the equation, you can see that it's continued to move to the upside there. Meanwhile, in the DAX, it staged a good rally yesterday afternoon. As you can see from the daily, the market driving through the 89%, but failing just to get back to the all-time high. I thought we might have seen this achieved. I think that was the objective, but as the headline states, that the rally fizzled out in the futures market, and this stopped the DAX from moving higher. But you can see there in the afternoon, the market moving higher. In the morning as well, we kicked off straight away and moved to the upside. This is anticipation that the Fed may not taper, I suspect. And then in the 2-minute chart, as we look at the detail, again, you can see that 7 a.m. we kicked off with the futures market moving higher back to the DP and also the BRN there at 15,800. And then the market trading up to the previous day's high, where it found a bit of a problem until it found support at the 20-bar moving average before moving higher and then getting stuck in a range until the Dow came on stream, the pajama traders moving the market in the early hours. And there you can see exactly what they were doing. And then in the afternoon, the market pulling back, and the time is actually wrong on this chart because it should be 1:30, not 14:30 for this week, which I keep changing before I start trading, but obviously forget to save it. That's more like it. So yeah, as the Dow rallied, you can see there that the DAX also, and I thought when we'd broken the 15,950, we were heading for the 16,000, but and the all-time high, but didn't quite get there. And then overnight prices have been trading sideways to higher, which is what we're seeing there now. So looks like they're still going to pump the market up in anticipation of what Powell's going to say later on. And of course the ADP numbers are going to be important, as well as the non-farm payroll figures out on Friday. Meanwhile, in the metals, as I've said for the last 5 or 6 days in the market alerts, that they'll mark it down, and we saw this yesterday, that this has now started, and I don't mind, as I've said before. I still have an order in from the 9th of August for $20. Not from August. Well, yeah, it is August, isn't it? Let me just check, or is it September? Let me just have a look here. Yeah, it is the 9th of August. I have an order in there, as you can see, still to buy at below $20. I can't say it's going to go there, but you never know. After yesterday, there was no reason to move this down when you look at the dollar, but they have, and we're now back to 78.89, and I reckon we'll probably get a slam at some point back down to this level. It's hard to believe this market is so undervalued. Let me just show you something else here. This is a chart that I put together, and it goes back to the all-time high of 2011, which was the similar figure to the 1979, 42 years ago, just under $50, $47.89, and at the moment we're 49% cheaper than we were in 2011 and 42 years ago, which you can see there. Thought I would just graph this. I have shown this before, but when you actually see it like this, it just goes to show how cheap the silver price is. And you can see it's being hammered as well, because the gold-silver ratio is moving back up to 76 there. So you know that they're on the warpath again to hammer the price of silver. It's incredible. Every other commodity that you could think of is making new all-time highs. And the other day we had coffee, cotton, and wheat making new all-time highs. And the price of silver is 49% less than 1979. I know I keep going on about this, but I can't get over how cheap it is compared to 42 years ago, when the price of gold has actually doubled during this time, or from the 1980 high. It's actually gone up 100%, and yet silver is still 50% lower. The only commodity in the world that has never made a new all-time high, which screams undervalued to anybody with an ounce of common sense and logic. But it's manipulation, of course, that allows them to keep moving the price to the downside, as you can see yesterday in the 5-minute chart. Just bring this over a bit. when they came in, and that's exactly what they did. You can see it more in the 30-minute chart there, how they just hammered the price to the downside, and we're currently sitting at yesterday's low. And like I say, I wouldn't be at all surprised, and I'm quite welcoming of the fact if they want to actually hammer this down and make it 20% of the price as it was in 1979, that will do for me. Because at some point when this inflation really kicks in and the China issue that we're starting to see unfold here really gets going, then there's nowhere else I would rather be other than precious metals, because once the stock markets start to go pear-shaped as well, where do you think the money's going to go? It's going to go into anything that's undervalued, and the only thing that's left that's undervalued is the silver market. So there we go. There's a roundup of events today and what we can expect later. No doubts that if we have the taper, that the metals markets will get hammered, and the dollar, which we've not looked at, will be moved higher as it was yesterday. Interestingly enough, again, we've got this sort of disconnect, because the US dollar moved up yesterday just moved up to the upside, nothing like it did on Friday of last week, and yet the price of silver was slammed. So again, there's this sort of disconnect between this, shows again and proves the manipulation. Also, the dollar is weaker overnight, which you can see there, and the price of silver has also been moved lower, which again goes to show you there's a disconnect there at this time. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.